Listening to friends and family is always problematic unless your friend or family member is a licensed mortgage broker and you've given them all your details. Don't listen to them. They may have had three, four mortgages in the past. They may be property investors, but they don't understand your circumstances or they're not licensed professionals. Yes, it's good to have them to bounce ideas off, but I would say don't get your mortgage advice from someone who's not a licensed professional who doesn't understand your individual circumstances. And here's why joint borrower, sole proprietor, and right to buy is an absolute game changer. And one of the reasons why I'm so excited about the fact that you can do both. Many tenants can afford the monthly mortgage payments, but don't meet the lender's affordability, sometimes because they didn't have the conversation early enough with the broker. But by combining the right to buy discount and the joint borrower sole proprietor mortgage, buyers can be able to use the right to buy discount instead of the cash deposit, increase the borrowing power with the support of a family member, keep ownership in the tenant's name, get on the property ladder quicker. So yes, it's an amazing thing that you can combine right to buy and joint borrower sole proprietor. But the key thing, as I said, is making sure that you speak to a broker early. The summary of the mortgage process. So let me just explain the mortgage process, because quite often people assume, especially brokers, that everybody understands how it works. So the mortgage process is not rocket science. It's not a dark art. First and foremost, you're going to get an agreement in principle. The key thing to remember is that an agreement in principle is not, in most cases, a credit check, and it doesn't always take into account all of the criteria. What I mean by that is you can go to a broker and get an agreement in principle. But if the broker has not assessed all the criteria behind the agreement in principle that they're doing for you, then it might not be worth the piece of paper that it's written on. And what I mean by that is when you do an agreement in principle, it asks you information such as salary, time and country, outgoings, but it doesn't validate the information you put in. So I could do a mortgage application for myself or an agreement in principle and say I make £5,000 a day and I have no credit issues, because it's just asking you yes, no, and to put in the data. It could then produce an agreement in principle. However, when you go to get the full mortgage or when you complete the full mortgage application, this is when it's going to ask you for bank statements, pay slips, P60s, proof of identification, etc. And this is where I find that a lot of clients get duped. So they speak to a mortgage broker who's more focused on getting the agreement in principle than checking to make sure that the agreement in principle will convert into a full mortgage offer. Because when you're buying a house, let's be honest, you're not looking for a mortgage and you're not looking for an agreement in principle. You're looking for the keys to that property. And anything that's going to prevent you or delay you getting the keys to that property is useless. So make sure that your agreement in principle is fully assessed against criteria. But the first step is getting the agreement in principle. The next thing is a valuation. I like to explain this to people because it's a valuation and not a survey. So the lender will do a valuation, which is them saying, this is how much we think the property is worth. There's three outcomes that you can get from the valuation. The lender may agree with the purchase price that either the council or the seller is given. So they may say, we've agreed a £450,000 purchase. We feel that the property is worth £450,000. You're good to go. The other thing that could happen is they could come and say, we feel that it's worth more than the £450,000, which might sound like a bonus. It is problematic if the disparity is really high, because if someone's selling a house on paper for £450,000, but the lender says it's worth £650,000, that's going to raise a lot of red flags. Doesn't happen often, but that's another outcome that you can get, that the valuation comes in higher. The third one, this is the most problematic one, is that the valuation comes in lower. If it's £500, £1,000, then it's not a big deal. But if the valuation comes in considerably lower, you will need to revisit the product that you're going after, because it might impact what's called loan to valuation. So the loan to valuation is the amount of money that you're borrowing versus what the value of the property is. So if when they do the valuation comes in really low compared to the offer price, it may knock you out of the particular product that you're getting. Once the valuation comes in, if everything matches up, that's when the underwriting happens. If you work with me, we do the underwriting in advance. So that means we've already collected all of the items we need to validate what you've told us to ensure that your agreement in principle becomes a mortgage offer. So the underwriting is when the lender will ask for pay slips, bank statements, proof of residence, visa, whatever. This is when the lender is saying, well, yeah, we decided that we would lend to Mr. Smith when we did the agreement in principle. He looks fine. But now let's look at the property. And this is important when you're doing a right to buy purchase, because some lenders will not lend on certain properties. So this is why it's important that you talk to the mortgage broker. They've done their research in advance. But the underwriting usually takes about 10 business days, depending on how fast you move, how fast your broker moves. But it's about 10 business days. Once the underwriting is complete, you get the full mortgage offer. This is the most exciting part of this part of the process, because now the lender has said, we'll lend to Mr. Smith. We're okay on lending on the property. And here is your mortgage offer. The mortgage offer is usually good for about 6 months. Because in the UK, as of the recording of this video, they are looking at changing this. But as of the recording of this video, the mortgage process takes 4 to 6 months from the time that you get your mortgage offer. 4 to 6 months from when you get your mortgage offer. This is why it's also important that you do your due diligence, you gather your documents in advance, that we can try to make sure that we move very quickly. Once the mortgage offer has been produced, you as the buyer and me as the mortgage broker, pretty much most of our job is done, because the rest is then with the solicitors. So the seller's solicitor will talk to the buyer's solicitor, or if you're doing a right to buy purchase, then your solicitor will talk to the council and they'll do their bits and pieces. I would say that if you're dealing with the council, this part can take a while, but as long as you meet the deadlines for producing what you need to produce to the council, if it does take a while because the council is moving slow, it's fine. But what I would caution, I've seen people, they get the mortgage offer, then they go out and they start to purchase things and, take out loans. Don't do that. Keep in mind that the mortgage is not complete until the mortgage is complete. So the mortgage is not complete until the mortgage is complete. So just because you may have a mortgage offer from a lender, it doesn't mean that the whole process is complete. I've seen situations where in that time between the mortgage offer being produced and the exchange and completion date, clients have gone out and taken out large loans. It could knock your affordability out, because if the process takes too long and maybe the mortgage offer expires, they may reassess your affordability. So maintain good credit, keep your payments up to date, do everything that you were doing prior to getting the mortgage offer. Keep that up. Obviously, you want to just keep that up, but certainly don't think because you have a mortgage offer, you can flip things around and stop paying bills. So once you have the mortgage offer, you then go to an exchange and completion. Thing to keep in mind, in the UK, this doesn't really apply to right to buy, but in the UK, a mortgage is not legally binding with the seller or with the buyer until very late in the process. So there is a process called gazumping, which again, they are looking at. So gazumping is essentially, you may go out to buy a house, you have an offer accepted, you've done the full mortgage application, the offer is accepted, everything's moving forward, and then the seller decides that they're going to sell to someone else who offered them more money. You can avoid this if you're working with a good broker who will ask the right questions and make sure that things are moving quickly, but it's not legally binding until very late in the process. So do keep that in mind. That's basically the mortgage process, very quickly explained. But if you're working with a good broker, what will happen is they'll walk you through this, they'll hold your hand, they'll answer your questions, and never feel that there are any silly questions. I do this every single day. And when I was buying one of my first properties, there were certain parts of the process that I'm never involved in. So I had questions about them. So if you're a doctor, lawyer, physicist, rocket science, it doesn't mean that you understand how mortgages work. And you should always be able to ask questions of your solicitor. You should always be able to ask questions of your broker. And you should never sign anything that you don't fully understand or doesn't reflect what it is you're actually trying to do. Here's what you're going to need for an appointment for me or any other broker. So make sure you start to gather these things in advance, because as I said, what quite often happens is the purchase or the deal is delayed because we're waiting on the client. So first you're going to need 3 months bank statements and 3 months pay slips. So that's 3 full months. If you're paid monthly, then you would just need 3. If you're paid weekly, then you would need more if you're paid bi-weekly. But 3 of the most current months, bank statements and pay slips. If you have multiple accounts that you transfer money between, then you're going to need all of those accounts. Your credit report from Check My File. Make sure it's from Check My File, not Equifax, Experian, or TransUnion, because Check My File is going to give you all of the information about all of your credit files, proof of identity, proof of deposit if you're buying a first property and maybe you're not doing right to buy, and the name of your solicitor. So these things are key and these things are important. But let me explain why they're important and how to make sure that you get them quickly. So 3 months bank statements. Most lenders or most banks do have an online portal. You go in there and you produce 3 months bank statements, not transactions. So the difference is your bank statement will have your name, address, account number, etc. at the top, and it will be a statement of transactions in and out. Do not print off the transactions and mistake that for your bank statement, because lenders need the full bank statement with your name, address, account number, etc. on it. 3 months pay slips. 3 months pay slips are very important because this is how they assess. Maybe you're paying student loans. Make sure that you're paying right national insurance, etc. So 3 months pay slips. Most lenders don't accept screen prints or JPEG, so make sure you're printing it from your employee portal. 3 months bank statements, 3 months pay slips. Check My File is vital. Not every broker is going to ask you for your Check My File credit report. The reason why we ask for the Check My File credit report is because the Check My File credit report is a combined credit report. Many people don't know this, but not every lender reports to every credit reference agency. When you look at your Check My File credit report, you might find that on Equifax, it said that in January of 2025, there was a late payment, but then on your TransUnion, it says February, and then on your Experian, it says you didn't miss anything. So what you want to do is get your Check My File credit report, go through it thoroughly, make sure everything is correct. Proof of address, you're going to need the proof of address. You can't use a bank statement in most cases for proof of address. You can't use any document that you've used for something else. Proof of address is usually a utility bill, council tax bill. It's not a mobile phone bill. It's not anything that you've used for something else. Proof of your identity. Most of the time, it's going to be a passport. And here's the thing, and this is the bit that can tend to hold things up. For proof of identity, you're going to provide a passport. If you are on a skilled worker visa, you also need your S code, your share code. So we know that you can get a mortgage in the UK. But when you're providing the documents, they have to be good quality. What I always ask people, and I advise them, is that it's usually going to be better and easier to get it by scanning it. Trying to get it in your phone, you're going to get glare and blur, and most lenders aren't going to take a poor quality. So I'd say scan it, put a sheet of A4 white paper behind it, make sure there's 3 inches of white space all the way around the document. So proof of identification would be your passport and your driver's license. The other thing that you can get, if you can get your P60, get your P60. And another important thing at this point that a lot of brokers will not express this early, make sure you find a solicitor early. So if you work with me, I will refer you to 2 solicitors. I will find one and produce a quote for you. I'll refer you to our preferred solicitor. You don't have to work with our solicitor, but whatever solicitor you're going to work with, make sure that you find them early. Make sure that you're comfortable with them. And the reason why this is super duper important is because with mortgages, things move really slow, then they move really fast. If you're purchasing a home through a estate agent, once your offer is accepted, one of the very first things that they're going to ask for is your proof of your solicitor. They're going to ask for your agreement in principle. So make sure that you have those things in hand and ready. Don't start trying to find a solicitor too late because it's going to cause problems for you. So get your solicitor early and make sure that it's someone you trust. And my name is Anthony Lindsay. I make these videos to explain things in detail. These are not short clips and 30-second TikTok videos. I want you to understand how things work. I want you to improve your financial literacy. So if you found this useful, please share this with friends and family. It's a really small channel, so every subscriber helps. And the other thing is, if you do reach out to me, you reach out to me. If you call that number, I'll pick up unless I'm with a client. So be sure to make sure that you share this, like this. If you have a topic you'd like for me to cover, make sure that you put that in the chat. I do respond. My name is Anthony Lindsay, and I appreciate you watching. And I have some other videos, so make sure you watch the other videos. And if you do need to make an appointment, you can just call me, or you can use the QR code to book an appointment. I don't charge for the conversation, and I'm always here to answer your questions with no pressure, no hacks, completely compliant, and I'm here to support you and your family in your property journey.